Hello and welcome to our free financial forecast. Today is Saturday, April 16th. I'm Robert Charles, and in this video you'll discover all you need to know in order to trade and forecast the natural gas market. And first and foremost, a happy Easter to you and your family. There was no trading, of course, on Good Friday, so these charts are updated through Thursday. I was asked to do a follow-up to natural gas, a video we posted some time ago with a setup. We like to do these setup markets in order to help you to make some money, hopefully, and also to give you an idea of how our system and how we trade, and like to look at the setups in the various markets. And what we have here on our YouTube video is just the tip of the iceberg. So you can subscribe to the YouTube video if you'd like to be updated when we post new setup markets, or you go to our website, Ichimoku Cloud Trends.com, and sign up for our email list, which will also update you. It just depends whether you get the notification on YouTube or via email. In any case, we do look at all major markets every single day using the exact same system I'm about to cover here, and you can see how the trades work out and get a taste of what we do. Now, without further ado, we're going to look at natural gas. I'm first going to show you briefly what we were looking at when we put the original video up with the setup market, show you what happened since then and what we would recommend doing now. So if we take a look, this is our long-term weekly, our medium-term daily, and our short-term 60-minute chart. For those who aren't familiar with the Ichimoku Cloud system along with our wave counts, targets, where there's the horizontal lines going across. This is a resistance zone, these purple lines, a purple zone I should say, and our arrows are where we have the buy setups. So if we start with the weekly chart, well, let's start with the daily chart because it's a little bit cleaner. You notice we had two green arrows. Now we were in this neck of the woods when we did the video, and we had two buy setups, one from the 7th and then a second one from March 21st. The slight pullback did not negate the original setup. They were in a similar area. It really depended which way you wanted to go. In both cases, in all of our setups, the market has to take out the high, or if it's a sell, take out the low. In this case, since it's a buy, we have to take out the highs, and you need to have a trigger. So what we were really looking for, and this is going to help explain our thoughts about what to do now, because specifically we were asked, would we sell this market at this point? We generally think that one of the most consistent cycles in the market is you get these horizontal moves, we get a big vertical move, and the vertical moves tend to get more horizontal. So we go horizontal, vertical, horizontal, and so forth and so on. That's what the typical market action, what we normally get. So what's happening when you get these horizontal moves is that the big money is positioning itself. This is the establishment, the big traders. They're establishing a position in here. In this case, they were looking long, and there you go. So they're getting in before the move occurs. So we had our buy setups in place in a similar position. Sometimes they buy a little lower than we do. I like to play a little safer than some. I like to wait until this market's about to break out. We're not always right, but that's what the setups are designed to do. These, incidentally, are two different setups. And when it broke, you can see what happened. It broke quite strongly. Our target zone started just above the previous pivot high, the top of the 3 wave, and it went pretty far because of how wound up this market is. Remember, the more wound up a market is, the more it's going to take off. And so sometimes, because we have these tall zones, I have this black line in place. This is the sweet spot. That suggested that this market was likely going to go closer to the top of its zone. Well, so far, as you can see, it actually blew through the zone. So what do we look at next? The extended target. Now, extended targets, this is a second extended target, meaning this is the original, and there's the extended above it. That's why it's a 2 there, is at 8.250. That is somewhat rare to get hit. They do hit with some regularity, but it's atypical. But that's what is showing right now, that we have a reasonable probability of making the extended target on that daily time frame. We take a look at that weekly time frame here, and we had the buy signal on the start of May 28th as the week that we had the buy signal. Remember, for a buy signal, we have to use a trigger above the high, which happened. And right now we are smack dab in the middle of our resistance zone. This market is highly likely to reach the sweet spot. This is the area. It's just that the market will typically hit this line, suggesting we're going to go somewhere to the midpoint of the resistance zone. That doesn't mean it won't continue all the way up, but in this configuration, most likely we'll get a stop in the action before if we ever go to the top of the zone. So I do expect, considering especially how close we are, the 7.580 number will probably get hit. Again, not a guarantee. The reason why the markets start having a harder and harder time as they move away is because the long-term and all these various time frames, the long-term equilibrium point where the market wants to kind of hang out is the cloud. And so it takes fuel to sort of push it away from the cloud. And the further away we get, the more gravity wants to reassert itself, and we start going back towards the cloud. Now, many times what happens is the cloud and price sort of come together instead of getting a big move. So I was asked specifically, well, we hit the targets, should we sell this market? And my answer to that is typically no. And here's why. I told you at the beginning, or not long ago at least, what typically happens is you get these horizontal moves vertical. Now, this is a little bit steeper than you typically see, closer to the rare V top, but not quite. Normally, if a market's going to change, it will go horizontal first off the vertical move. I'll explain why. The reason why it will normally go horizontal first, think about what the big money has to do. Let's take a look at the daily chart, which is really clean. In here, the big money was buying. And so in order to buy, they need people to sell. So we get this back and forth tug, this tug of war, and we're here at equilibrium. They were positioning long before it took off. Now, let's assume that they think this market is done, and they want to sell. So the smart money, the big money, the establishment players, they want to sell. Well, in order to sell, if they want to sell out of their position, what do they need to do? They need other people, you and me, the smaller players, to come in and buy it. So you'll start seeing in the media that they control all sorts of information about how natural gas is going through the moon. Natural gas is going to, now maybe it will keep going up, and I'm not saying that we are set for a downfall. That's not what I'm saying. The question was, should we sell here? And what I'm trying to explain is why V-tops, meaning we would just go straight down, are rare. It's because if the big players are long, in order to go short, they need time for small buyers to step in, for them to sell to. Normally the market will then sort of go into more of a horizontal move, let that cloud catch up. If the market's then going to fall and the uptrend is over, and they've been establishing not only getting rid of their longs, but actually going short, that will usually happen first. They get caught off guard if you get a V-top. The big money does, because it makes it very hard for them to unwind their very large positions. Remember that if this is the end of the move, if that's what you really think, they can't just on a dime sell off their big positions, or the market's going to just drop like a stone. So they need the market to hold up here. Sometimes they'll even support it near the lows of the range just to keep it in that zone. Now, this was the first I know of when this was talked about. This was talked about by Richard Wyckoff in the 1920s. The idea that the big players will try to do their buying when you're selling and sell when you're buying, because they need you to take the other side of the market. So what that ends up looking like on a chart, usually you'll get a horizontal move first. In fact, we're probably going to get a horizontal move somewhere in here, even if it's going to keep going up. Normally, that's what happens in the marketplace. You get horizontal to vertical, either way. So there are, of course, all sorts of patterns, price patterns, that try to pick off the end of moves, exhaustion patterns. Some of the traditional ones will be like a head and shoulders. I point those out from time to time. But head and shoulders pattern will also look like a congestion zone. There are some more sophisticated patterns like a Gartley, butterflies, bats, all these things, which will often try to signify the end of a move. But more often than not, the higher percentage play is we go flat. But the way this market looks right now, to me, it looks like we have at least a little bit more of an up move, where at least on this weekly chart, to make that 7.58 number. And let's take a look at the 60-minute chart now. And where is it? Well, it's, of course, had an up move along with the higher time frames. The sweet spot of this market actually came in before the resistance zone. Now, that's not typical. Why did that happen? Because the 12-way was very shallow. Remember, I told you, horizontal, vertical, horizontal, right? This is a horizontal move, vertical. We are almost certainly going to hit the top beginning of 7.387 on the 60-minute chart hit the beginning of that zone. Now remember that we saw a 7.58 number on the weekly chart. That's going to put it just in the middle of the zone. It's another reason why I think there's at least a little more up move in natural gas. So I think right now it's too early to sell it. I think that it would be very difficult to take another buy in this market because of the fact that it's very overbought on all these time. It's either modestly or very overbought on all of these time frames, depending which time frame we're looking at. If we were going to take another buy, we need to see it somewhat of a pullback here first on the 60-minute, and that would be the time frame I would probably take another buy in. What we should be doing right now, depending upon what you took to buy on off the weekly chart or off the daily chart, either way, you want to be trailing a stop. You should be taking profits off as the market's hitting these various targets. It's got another target on the weekly target. So even if you took the daily, look at that 7.58 number, you have some still on, take some off there, trail your stops, and then we wait for the horizontal move to set up, a waiting game. It's not impossible this market view tops and then comes screaming down. It's just a low probability play, so I like playing it the way I told you. If the market goes flat, we do sometimes get counter trend sells after a horizontal move. If the market then tells us it wants to go down, we'll take a sell. That we do that as well. So we don't always go with the trend. We just typically go with the trend because most of the time the market continues on its trend. But if it doesn't do that and it starts heading down, we take sells too. So that's how we look at this particular natural gas market, and you have a fairly good sense of what we're trying to do with our setup markets. So we'll try to put some more setup markets since they seem to be popular here on YouTube and with our various videos. And don't forget to subscribe here to YouTube. And also you can look for our premium services where we look at all the major markets every single day. So thanks so much for watching. Have a great rest of your holiday weekend. We'll see you next week.